All right, traders, it's a beautiful Monday morning. You are welcome to a new week. We came late today because there's nothing realistic or important yet, right? So let's share this live stream with our students in the VIP Telegram group, the free group, the channel trading signals community, right? Let's do that right now. Let's do that right now. I'm gonna forward this link to traders in our community. Let's go viral. Let's start dropping it. Let's start dropping it. All right. All right. Okay. Now, based on what I have right here on my price chart, this is a chart of the British pound. Can you all see my screen? Are you all there? Let's try the app again. Let's check our app. Let's check the network strength. Let's go to the software. Okay, excellent. We are good. Now, we mark some key level structures from our weekly chart. That is the first thing we gotta do. Now, before marking key level structures on the price chart, first thing we have to pinpoint point of interest, which is what I call POI. POI. Levels which are of great importance. That is what we call POI. These are levels in which majority of the market are interested to take actions, right? So this is what we call P. We have a low swings here. That is a break of a structure to the downside. We have a major swings rejection to the downside here, 17th of July 2023. We got a break of structure and a pushback below the structure, which is a false breakout. This is a false breakout, right, on the weekly chart. Now, we zoom in on this price chart. Now, before we zoom in, we can construct a technical level at those zones of rejections to capture highs and lows. So we have this level with a horizontal line, but there are some bits and times whereby you are confused. You do not know the exact zones you should put your horizontal line. So whenever you have something like this, what you just have to do is to use your rectangular tools. So your rectangular tool from these zones all the way down, you can see that. So which means we got a break of structure at these zones structures on the 10th of July 2023, a close out of this level 16th of September, and a close back into this level that was on the 30th of September. Currently we are gravitating below this level. Now this proves that these zones here is a constant supply for us or resistance. Now let's zoom in on this price chart. Zooming in on this price chart, we can see our price keeps on pushing down. We kept pushing down. Now the question we need to answer is where is price going on this price chart? Where are we navigating to on this price chart? Where are we going to? Now, before we can decide where we are going to, we need to be able to read the market structures in this market. Yes. And I will repeat myself again. For those who are just joining us for the first time, I'm going to repeat myself. Let's just use a new project here. All right, and let's just repeat things here. I'm gonna change this color to something. Enable my lights. Okay. All right. So I was using this. I'm gonna wipe out everything we have right here. We delete everything right here. This is for people who are just joining in for the first time, right? Because some people say they are just joining us for the first time. Now, this is the weekly chart of the British pound sterling paired against the USD. Before we do anything on this price chart, we need to mark our key level structures first. Do we have someone calling me right here? I'm in a meeting, please. All right. Now, this is the chart of the British pound sterling paired against the USD. Before we start doing anything on this price chart, we need to look out for point of interest. Point of interest are zones which are of high significance for either the buyers or the sellers in the market. These are zones whereby majority of the liquidity in the market are hiding or are being hidden, right? And whenever price plunge or push into these zones, we will always see a massive reactions in the market. Now, where are the point of interest or POI on this price chart? This is what we need to find out before we start charting or taking any trade on any asset we trade. Now, this is the chart of the British pound sterling paired against the USD. So the first thing I do whenever I open my chart is to clean out everything on my price chart so that to eradicate distractions. Now, once I have a clean chart, the next thing is to start looking out for point of interest on my trading chart, because the point of interest will not only help me to mark key level zones, support, demand, or resistance, supply, whatever, but it will also help me to know where are the zones I need to focus my attention on as a trader. Because in reality, price is going somewhere. It's either going up or going down. And then we need to know how to identify the next potential swings in the market before it becomes too obvious for the majority of the market participants to get in. Because whenever a setup is too obvious, such setup tend not to move too far. Now, the first thing I do right here is I look out for point of interest. Now, point of interest can either be major swings or highs, which has serious rejections. Now, based on this price chart on the weekly chart of the British pound sterling paired against the USD, zooming out on this price chart, we can see we have a break of structure. This was a swings on the 6th of December 2021. Price broke this level that was on the 17th of March 2022. We mark that level. Now we proceed to the right hand side on our screen, and we have another retest of this structure that was on the 10th of July 2023. We can see that we mark that level, and then we proceed further to our right hand side. On the right hand side, there was a lot of drama that went up at this zone. We broke out of this level. Let's zoom out properly. Let's zoom in. Now on this price chart, we can see it looks like price is about to break out of this structure, but at the end, the price deceived those who wanted to buy, and the price reversed against them. And this is what some traders call liquidity sweep, manipulation order flow, or false breakouts, fading the breakout, whatever or whichever of the names you want to call it. The most important thing is you know the implication of this move right there. Now the price did as if it was going up to start going in a bullish manner, but instead we got a reversal back, a switch of direction below this structure. Now this turned this structure as a supply for us or as a resistance for us. Now we are currently trading below this supply or resistance zone. Now the next question now is, should we look out for trade opportunity right here? If we are going to be looking out for trade opportunity, is it going to be buy or sell? Before we can give answers to that, there are some technical factors we need to be able to define in order to build our probability. And before we can build probability in trading, there are different factors that have to be combined in order to give us the support that okay, or to aid us that okay, this is going to be a profitable or high probability trading setup. Now, before we can do that, let's just mark our key level structures on this price chart. So we have point 1, point 2, and point 3, and point 4. So we can mark this level right here as a supply or as a resistance structure. Now, there are different ways in which you can use to mark your supply resistance, or there are different tools rather. Now, you can use the horizontal lines to mark your resistance or supply zone, but majority of beginners in the market find it difficult or strange or complicated when it comes to marking their support and resistance with horizontal line. And I do advise beginners to use the rectangular tool if you fall into the category of those who are not well grounded in the aspect of marking support and resistance with horizontal line. Now, this is what you need to do. Just remove what we call the rectangular toolbox right here, and use this rectangular toolbox to mark your lows and the highs in that market. Now you fire it to your right hand side as your what? As your supply or resistance. If you are connecting from the bottom, that will be your demand or support. Now, on this price chart, on the weekly chart of the British pound sterling paired against the USD, now we can now see we have supply or resistance above. Now, price is currently trading below this supply or resistance zone. It is not yet done in that aspect. We still need to look out for market structures in this chart. Now, for us to look out for market structures or swings in the market, there's a tool we can apply which is called the trend line. So you can use the trend line to find out the direction of the market swings. So we zoom in on this price chart and we can see we have what? Higher lows, higher lows, higher lows. Now, this market is indirectly telling us that the swings in this market that lead to this first breakout was a bullish trend. Likewise, we have another what? Higher lows right here, higher lows, and we have our lows. Now you can see on this price chart of the British pound sterling paired against the USD, price was carving continuous higher lows, higher lows, higher lows, which is a characteristic of a bullish trend, right? Now let's get back to our price chart and let's remove these higher lows and higher lows to make our chart to be clean, right? Now we zoom in on this price chart again. Now we look out for a way whereby we can construct our trend line. If we are unable to connect our trend line to fit properly based on the lows of candlestick, based on the concept of trend line, if you are willing or if you are, it is better to connect 3 successive tests of zones or points to act as what? As a trend line. In the situation whereby you can only see 2 points, then the probability that such trend line is a trend line is not valid, or it doesn't carry a high probability. So this is why I'm not a fan of using 2 points to connect trend line. Instead, I want to use 3 successive rejections of points to connect my trend line. So wipe that out. Now, on this price chart, it's unable for us to connect what we call the trend line. So we remove it, and then we go to the day chart. On the day chart right here now, what do we have on the day chart? Now, on the day chart, this is what we have on the day chart. As you can see on the day chart, we have higher low swings, higher low swings, higher low swings, right? Now, we still have the higher low swings in the market to mark out. So we mark from the low swings all the way to this lows of the 9th of August. We mark that level, and then we mark these lows as support. We mark this level right here. Okay, now these are the key level structure we have on this price chart, but this is not yet over. We still have some structure we can still mark on this price chart. So we can mark another structural zones here as in minor zones which have been broken. In fact, I'll use other color here. Let's mark this level. Yes, I have a minor structure taken out at this level. Now this chart is properly prepared. Right now, for those who are trading the British pound sterling paired against the USD, this is what you need to have on your price chart. If you have anything different from this, then it means you are trading I can't say nonsense, but I can't just understand what you are trading, right? So this is what we have right here. You can see that. So this is how we mark our key level structures on the British pound sterling paired against the USD. Now for this following week, we are going to start looking out for trade opportunities at these zones. You see that price to flaunt, push down to the liquidity zone, the point of interest, the major swing rejection structures, swings on the 26th of June and swings on the 8th of August. So if price can dip down into this structural zone right here, then there's a tendency for price to attract liquidity right here to the upside. Alternatively, if price should break this level right here, there's a tendency for liquidity to increase more to the downside. So these are the levels of interest. These are points of interest in the market. So this is how we mark our key level structure. So I hope you guys found this marking of key level structures interesting on the British pound sterling paired against the USD. So currently, based on what we have on the British pound sterling paired against the USD, I can't see anything realistic right here, and I wouldn't be involved in any trade. But anyways, that doesn't end right here. Let's go on the 4-hour chart. On the 4-hour chart, there's a pattern switch I saw on this price chart. I can see something that looks like a reverse symmetrical chart pattern, but this doesn't look so strong or a convincing pattern to me. So based on what I have on the British pound sterling, in this market right here, I come into conclusion that the market is in a state of confusion. The market is here to open up to make the decision. Maybe it's going to break to the upside, or maybe it's going to break to the downside. So based on what I have right here, I am out. I am not doing nothing on British pound sterling paired against the USD. Instead, I want to see when price opens to the upside or maybe break to the downside before I start looking out for a way to play this currency pair. Right, so that is all on the British pound sterling paired against the USD. If you found this analysis useful, helpful, please kindly drop a like button on this live stream. Right now, currently this week I'm not doing anything. I'm just monitoring the market to see what we have. Other market as well, they are just rugged and dirty. So currently right now I'm doing nothing. I'm just monitoring. I'm just a spectator in the market, so I'm doing nothing right here. Right, New Zealand paired against the USD, nothing realistic right here. So today Monday is just for us to monitor what is going up in the market so that we can make decision for the next following day, Tuesday, Wednesday, Thursday, Friday. Right, so our time is up and to start making plans for my VIP students. I will see you in the next one. This is just a quick update on British pound sterling paired against the USD. And for the BTC currently right now, I told you right now, if you are looking out for jumping right here, just know you are accumulating at a higher price. It is better if you can see price pushing back, because price will never move in a straight line. The breakout has occurred, but if you can see a pushback from this level back to the swing of highs right here, right, if you can see a pushback in this level, maybe to 71 or 70,000, I think that would be a better another entry zone. Right, thank you guys. I will see